Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And Bookmap Discord, let me just say a word about that. Great place. There are quite a variety of traders there, wide variety of content on multiple asset classes, stocks, options, futures, crypto, and also on a wide variety of languages. And everyone, if you're not already on Bookmap Discord, you're welcome to join. Excuse me just a moment. Sorry about that. I'm also on X, formerly known as Twitter. My name there is at Doug Pless. And I did post a setup on X over the weekend. It was the NQQQ short that I talked about last Friday. So if you're active on X, please take a look. If you like it, give me a like and a follow. Here are the key tenets of my trading and my approach to trading. The first is options trades and market maker hedging activity are key drivers of price in many stocks and futures. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and ES is a derivative of SPX. So when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for SPX, that's the only way that they can hedge with ES futures. You can't buy SPX itself. And the same for the Nasdaq 100. NDX is the underlying index. QQQ is the ETF version of the index. And NQ is a derivative of NDX. And again, when traders
Iceberg
buy and sell,
ESH for CME by 625. Iceberg ESH for CME by 309. Stop ESH for CME sell 610.
We better look at the S&P 500 in just a moment. That was stops and icebergs alert. So sorry about that. So when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. At the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. So I'm looking at how these key levels that I'll talk about in just a minute shift up or down. Shift up indicates traders are looking for, expecting, and positioning themselves for higher prices. And just the opposite when these key daily levels that I talk about move lower. The second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis and for setups for entries and exits. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. All right, here's my agenda for today, Monday, February 22nd. First of all, I want to go over news items, economic data, and events for the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, economic data. I think there was a bond auction today at 1 p.m. Let's take a look at the S&P 500. All right, so not much of a reaction. Maybe that came a little bit late. Somewhere around 115. All right, so tomorrow there are a few high impact data reports this week. First of all, tomorrow 8:30 a.m. Eastern Time, durable goods. 10 a.m. consumer confidence. On Wednesday, 8:30 a.m. Eastern Time, GDP, that is the fourth quarter second estimate. And then on Thursday, the big data release for the week, PCE data at 8:30 a.m. Eastern Time. Then on Friday at 9:45, manufacturing PMI, and then at 10 a.m. another PMI, manufacturing PMI data, also consumer sentiment. And it looks like the job report that normally comes out on the first Friday of the month will not be this Friday, but next Friday. All right, so that is and there also are a variety of Fed speakers this week. All right, so that's the news for the week. Really starts tomorrow with durable goods. All right, let's move on to positional analysis now. I'm going to start with the S&P 500. This is the ES Futures and Bookmap. And before I take a closer look at this chart, I want to step back, take a look at a larger time frame, and I'm going to go to the underlying index, which is SPX. This is a one-day chart, and SPX. This current rally began last year, October 30th, and the SPX moved up just a little over 1,000 points in that rally, up to just above 5,100. All right, let's move on now to a shorter time frame. So we know the SPX has rallied pretty substantially for the last 4 months. Now let's take a look at a shorter time frame. I'm going to go to a 30-day 1-hour chart. Let's take a look at what happened at the recent expirations. This is the January expiration. That's Friday expiration, the monthly expiration. On that date, SPX broke above the 4,800 level. Here's the February expiration, Friday expiration. This is more typical price action of a call-dominated expiration. A little bit of consolidation after that options expiration until NVIDIA reported earnings, taking SPX up to just above 5,100. And note, for this year, the SPX call wall has gradually moved higher from 4,800 to now 5,100. And that is bullish. And that's for the year. All right, let's take a look at the levels on this chart. I'm going to go ahead and zoom in a bit. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. I update this once a week. I just get it from an options chain. So any trading platform that has an options chain should have this data available. Again, I update that once a week. The dashed blue lines are showing the lower and upper daily expected move. also based on the options market. I update that once a day, and that is based on the closing price from the previous day. And I post both of these numbers every day the evening before in Bookmap Discord in the Options-Doug chat channel. All right, the other lines on this chart are Spotgamma levels. And these are proprietary Spotgamma levels. They're provided to Spotgamma subscribers based on gamma-weighted open interest. They do change every day. These are the key daily levels that I talk about that I'm tracking, whether they're moving up or down. I'm going to point out the key daily levels. First of all, here's the put wall. That's at 5,000 now. That's a strike with the largest net negative gamma that can be expected to act as support. And the next level up, and that is also the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. So that's where most of the gamma weighted open interest is concentrated. Next level up is the volatility trigger. That's at 5,070. That is Spotgamma's proprietary gamma and volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, like today, market makers, when SPX is above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. So SPX is trading slightly above that level. Then the next level up is 5,100. That's the call wall that I mentioned before. That's a strike with the largest net positive gamma, and that can be expected to act as resistance. So this is showing a very narrow range here between the ceiling at the call wall and the floor at the put wall. So a very narrow range from put wall to call wall, 5,000 to 5,100. And hello Caesar, welcome. Says the volatility trigger along with Bookmap worked very nice so far. Yeah, both the SPY and the SPX volatility trigger. The SPY volatility trigger is also the put wall. We'll see that in just a minute. All right, so for the SPX, the volatility trigger and put wall both moved higher. That is bullish. And finally, let's take a look at, now that all depends on what traders are doing today. All right, so let's take a look at, there you go. This is what Caesar was talking about. That is the SPX 5070 volatility trigger, and before acting as support, the SPY 507 put wall volatility trigger acting as support. All right, let's take a look at one other SPX chart, then we'll get back to the Bookmap chart for ES. So this is SPX showing a let's see, let me zoom out just a little bit, showing Friday and today, showing how these key levels are acting as support and resistance. So this is Friday, showing the 5,100 call wall, and there's a combo level just below that acting as resistance. This was on Friday. This is today. The 5070 volatility trigger acting as support. All right, so those are the key levels in play for the last couple of days. All right, let's move on to Bookmap now. So in Bookmap, I have my own cloud notes. So I can show SPX levels. There's that 50-70 volatility trigger that I was just talking about. I can also show SPY levels here. Again, there's that SPY 507. That's a put wall and volatility trigger. Again, acting as support earlier today. Good targets for a short. And then right around 130, before maybe 125, S&P 500 broke down below that level. All right, note there is a difference in price between ES and SPX. And today it is right around 10.5. So the ES to SPX offset is 10.5. So I'm showing the 50-70 level for SPX at ES 50-80.5. And there's also an SPX, ES to SPY ratio that changes a little bit every day. Both those numbers get gradually smaller every day. And I do post all the index relationships that I'm using every day in Bookmap Discord. I post the preliminary numbers somewhere around 9 a.m. Eastern Time, and then I post the final numbers. I typically try to get those out around 10 a.m. I was a little bit late this morning. I had something to do this morning. All right, so that is the S&P 500. Key levels in play. Volatility triggers acting as support, and then this is the SPY 508 level, shown with this white line here. The label's kind of obscured, but that is also a Spotgamma level, acting as a good entry point for a short this morning. All right, let's move on to Nasdaq now. All right, let me just mention shifts in levels for SPY. Volatility trigger put wall also shifted higher, and the call wall shifted higher to 510, getting closer to the SPX call wall. The absolute gamma strike did shift lower, down to 500, from 508 to 500. So a bullish hat trick for SPY with only the absolute gamma strike moving lower. All right, let's move on to Nasdaq. All right, Nasdaq also trading at a very narrow range today. And I'm going to take a look, before I take a closer look at the start, this is the NQ futures. I'm going to go to the underlying index charts. I'm going to start with QQQ. Again, very narrow range today. Levels in play. This is a combo level, C3 level, acting as resistance right at the open. Then this 438 level acting as resistance. 437 support. So very narrow range here for Nasdaq. Now it looks like this. This other combo level may be acting as resistance. We'll see. All right, so again, very narrow range for Nasdaq. That's the QQQ chart. Let's take a look at NDX. Let's take a look at the last 2 days worth of data. This is the 18,000 level. This is for NDX, acting as resistance multiple times. Let me just do a quick check and see what that level is. 18,000 is large gamma 2. So 1 being the most important, 5 being the least important. So again, that is a large gamma level for NDX. and that's shown here on the Bookmap chart. So just like ES, I have my own cloud notes, so I can show NDX levels, QQQ levels, 437 acting as support, and then this zone between 438 and 18,000 more or less acting as resistance. All right, shifts in levels for the Nasdaq. Put wall and volatility trigger also shifted higher for both NDX and QQQ, and then the just like SPY, the absolute gamma strike for QQQ moved lower down to 435. All right, let me check for questions. All right, that is easy. Hello, welcome, glad you're here. All right, Bookmap works for crypto, and Spotgamma, you get, if you want to trade crypto-related stocks like Coinbase or Mara, you can trade those. I don't trade those. We can take a look in Hero, but as far as the coins themselves, like Bitcoin, no. Again, if you want to trade those in Bookmap, you can, but they're, the options market does not drive crypto as far as I know. All right, so that is easy. Also asked for key levels based on that chart. Key levels for what? I'm showing key levels for the S&P 500 and Nasdaq. All right, Caesar asked, want me to talk about the zero gamma level compared to volatility trigger. So let's take a look at something here. Let's go to let's see if it's on this chart. All right, so this is the, I don't see any way to zoom in on this. This is the gamma level. This is the gamma curve for SPX. And there are two levels on this chart that Caesar's talking about, and the zero gamma level is not shown. This is my understanding. I would suggest going to spotgamma.com, going to the free resources to get more information. The zero gamma level is exactly what it says. Below that level, market maker's position is negative. Above that level, market maker's position on the gamma curve is positive. And the volatility trigger is actually what it says, is that's where market maker's hedging will change based on the shift in gamma from trading with price to trading with against price. So a little bit of difference. Often they're at the same level, but they can be a little bit different. So again, if you want more information, Caesar, I suggest just going to the spotgamma.com website, go to the free resources, go to the help center, and you should be able to see more information. All right, so talking about gamma notional, let's move on now to taking a look at how market makers were positioned on the gamma curve at the beginning of the day. So what this is showing is gamma notional position, their position on the gamma curve that I just showed for the S&P 500, Nasdaq, and Russell 2000. Note for the S&P 500 and Nasdaq, all these numbers are positive. In a positive gamma environment, again, market makers' position on the gamma curve is positive. This means that traders are short calls, market makers are long calls, and they have to trade against price to hedge their delta exposure. And that's typical of a positive gamma environment. And note all these numbers did shift lower from Friday. So became for the S&P 500 and Nasdaq less positive, and then shifted more negative for RUT and slightly less negative for the IWM. All right, let's move on to some setups now. All right, Pavan, I doubt I'm pronouncing that correctly, says he or she does 0 DTE, SPX, and SPY. What add-on do you need? All right, so let's take a look at SP 500. I'm going to look at what options traders are doing first. Then we'll take a look at the ES chart and Bookmap. So I'm going to move on now from positional analysis to talking about some setups. So my thesis for the day, first of all, was looking for lower volatility, the lower trading range, more of a range day, mean reverting price action. Based on the shifts in levels, my directional bias was bullish, and we'll see in just a minute that the options trades did not really support that thesis, really after the first hour. And order flow did not support that thesis as well. All right, so this is the everything that we've looked at so far, other than Bookmap, is based on static data. The levels on the chart, the Spotgamma levels, also the Gamma model, Gamma notional, all based on data that's updated once a day, sometime overnight, available in the morning. I use that in my morning preparation. Now we'll move on to the execution part of my process, looking at live data, live price action, live options trades. So I'm going to start with options trades, going to see what options traders are doing today. So this is the hero signal in Spotgamma, available to Spotgamma subscribers. What this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. Spotgamma takes options trades, market maker hedging activity for all those instruments, and then shows it on this chart. The white line is showing price for SPX, and the purple line is showing the hero signal, again, hedging impact real-time options. And a falling hero signal indicates traders are taking negative delta positions. That means they are buying puts and or selling calls. Market makers will take the opposite side of that, and they have to sell ES futures to hedge their delta exposure. When the hero signal is rising, this indicates market makers or traders are taking positive delta positions. They are buying calls and or selling puts. Market makers take the opposite side of those trades, and they buy futures to hedge their delta exposure. All right, let's zoom in on this chart. And I'm going to take a look at this chart in a little bit more detail. I'm going to separate out what traders have been doing with puts and calls. There's a bug in this chart. I'm going to zoom over to one chart, go back to the S&P 500. That should prevent that problem. So first thing we note that traders are buying calls today. That's shown by the rising orange line, mostly from the cash open. Then that activity as SPX was near the high for the day, or actually moving down. Anyway, they took the foot off the gas. So call buyers, very active, aggressive in the morning, took their foot off the gas. And the falling blue line indicates traders have been buying puts. These lines are shown in terms of delta. Rising orange line, positive notional value, traders are buying calls. Falling blue line, negative notional value, they're buying puts, and it's almost even. All right, let's zoom in on the morning here, and we'll take a look at a setup. And I'm going to look at a short setup from around 10:30. Traders buying calls in the morning. Take the foot off the gas for just a moment, then start buying calls again. Then right around 10:30, they start selling calls. And then note around 10:40, they start buying puts. Buying puts, selling puts, start buying puts again. So notice right after 10:40, both lines are moving in the same direction. They're moving down. That's a very strong directional signal. It would be stronger if the orange line was sloping down a little bit more. But in any case, traders at this point are selling calls and buying puts. That's a bearish signal. So let's go take a look at Bookmap now and see what was happening at that time. Let's go back to ES. And we'll watch order flow in Bookmap here. Adjust this chart a little bit. All right, note during the morning, first thing, EOS was making a series of lower highs and finding support around the ES 5100 and the SPY 508 level. And then remember around 10:40, both the orange line and blue line started moving the same direction down. And this made, from the way I look at it, a good entry point right around 508 and 5100 for a short. And a pretty quick 10-point move down to the SPY 507 put wall volatility trigger that at this point did its job acting as support. Note during this time, the falling blue line, dark blue line, indicates that CVD is falling. That's cumulative volume delta. All right, so there's the short setup, and there were some large traders selling with iceberg orders. That's shown by the falling light blue line. Looks like that's the on-chart indicator. And note also during this time the falling yellow line, especially after 10:45, indicates that sell stop orders were fueling the move lower. Also shown by the on-chart indicator. All right, so that's the short setup in the S&P 500. We'll get to take a look at the live market. So this is what I was looking at this morning. So pretty bearish order flow all day here in the S&P 500. All right, let's move on to Nasdaq. Nasdaq more bullish in the morning. So let's see what options traders were doing. So for Nasdaq, I typically look at this Mag 7 signal. Let me zoom out so I can show what this is. So this is another combined signal showing options trades and market maker hedging activity for a combined signal of the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. All right, let's zoom back in on this chart. And as you all know, these stocks make up a very large component of both the Nasdaq 100 and the S&P 500, but especially the Nasdaq 100. Again, I have puts and calls separated here. This provides a little bit more clarity. So first thing we notice on this chart, right around 9:55, traders start selling puts. So the put line was slightly down for the day, and 9:55 traders started selling puts. That's bullish. Then just after 10, they started buying calls. So just after 10, maybe 10:05, both lines moving in the same direction up. That's bullish. Let's go take a look at Bookmap, take a look at NQ. Zoom in. All right, this is 10 a.m. Eastern Time. You can see all of the aggressive buyers coming in. These are volume dots in Bookmap. Green volume dots show more buyers than sellers. Magenta dots indicate more sellers than buyers. So we can see just after 10 a.m. when the call line started moving up on the Mag 7 stocks, aggressive buyers came in to Nasdaq. There was a pullback to this QQQ 437 level, and VWAP just below that. Good entry point for a long, and good for about 40 points or so up to the QQQ 438 level. Then a couple retest of the 437 level. So folks, this is just a round number level in QQQ, but it's this is where traders want to trade. So again, just a round number in QQQ, acting as support multiple times. All right, so that was the long setup in Nasdaq. Again, long entry right around 10:15, and then between 11 and 11:30, a couple more long entries from 437 up to 438 and beyond. All right, let's go back to Hero. See what was happening with Hero around those pullbacks to 11:25. Here this shows traders start aggressively buying calls again around 11:30. And they start selling puts as well again. Starting around 11:30, both the call line and put line moving higher in the same direction. Very bullish signal. Back to Bookmap. $437 continuing to act as support. $438 resistance, along with the 18,000 level. All right, let's take a look at some stocks. First stock I want to take a look at is AMD. Let's see what options traders are doing. Go to AMD. Note 180 is the call wall. Well, that's the key gamma strike, sorry. 180 is the key gamma strike. Let's zoom out on this. All right, so right out of the gate this morning, traders were selling calls. Flow alert comes in just before 9:40. A couple of big trades after that, and AMD drops lower. Note how right around 9:45, so this is happening pretty quickly. Call sellers, take their foot off the gas. Then they start selling puts, and price consolidates and moves higher. Let's go back to Bookmap. Oops. There's the quick move lower in the morning. Great entry point for a short here, right around 179. And VWAP, shown by this line, just below. Aggressive sellers come in, shown by the magenta volume dots, and that's good for about a 4-point move lower in AMD. Price reversed just below the 180 key gamma strike. Note all the liquidity at that level. That is shown by the heat map and Bookmap, showing a history of the limit orders in the order book.
Iceberg ESH for CME by 384.
Above price, those are limit sell orders. Typically for a stock, they come in at the cash open, stay in the market, in the order book until they're filled. All right, next stock, NVIDIA. Quick drop at the open, about 20 points. Let's see what options traders were doing. Let's zoom in on this. Just like AMD, traders were aggressively selling calls. Then they started buying puts also. So starting just around 9:40, a little bit before, blue line, orange line moving in the same direction, very bearish signal. Price drops, quick drop. Traders stop selling calls, start selling puts, just like AMD. Price moves higher. Note that 800 is the call wall, the key gamma strike. There's the 800 level. So this happened pretty quickly this morning. Sorry. Keep forgetting to grab that tool. So this move lower happened pretty quickly. But if you were fast, caught this quickly. Short entry at 805. Secondary entry at the 800 call wall key gamma strike. Good for 15 points down to 785. All right, the next stock I want to take a look at is Tesla. So we looked at two bearish setups. Tesla just the opposite today. Very bullish. Note all the green volume dots, a lot of aggressive buyers coming in. Again, the volume dot showing market buy minus sell. Let's see what options traders are doing. Let's go to Tesla. And they were buying calls. Note 200 as the call wall key gamma strike. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. 200 level acting as resistance. Call buyers. Note there was a flow alert right at the open. I'll zoom in on just a minute so we can see that. Call buyers. Start to take the foot off the gas about 11:45. At the 200 call wall, and price consolidates. Note how flat the blue line is. They have been selling puts, but that number is very small compared to
Iceberg
the notional
ESH
value.
for CME sell 315.
Sorry about that. So the notional value for puts, 37 million versus calls, 432 million. So an order of magnitude difference. All right, let's go take a look at the Bookmap. Here's the 200 call wall. Note the liquidity at that level. Limit sell orders. Options traders take the foot off the gas. Price consolidating, now moving lower, a little bit lower. Let's go back to Hero. All right, so again, this is a very typical pattern, except they took it a little bit longer, up until around noon, up to the 200 call wall, key gamma strike, took their foot off the gas. So that fuel that was driving Tesla higher has been shut off. All right, let's go back to the S&P 500. Does anyone have any stocks they want me to take a look at? All right, Vero says, I'm seeing huge differential between calls and put prices. Do you look it up? For what? What instrument? Are you talking about Tesla? Yeah, so we can take a look at that. We can take a look at this volatility skew. Let's go to Tesla. Let's see if that's right. All right, so what this chart is showing is implied volatility on the vertical axis, strike price on the horizontal axis. Typically, we'll take a look at the S&P 500 in just a minute, and there will be some differences in this chart. This rising line here, so when there's a demand for calls, price, just like everything else, price increases, implied volatility increases. And this is an indication of that. This is for Tesla, showing that calls, out of the money calls, are expensive. Implied volatility is increasing. This is a sign of demand for calls. All right, let's take a look at, see if we can find SPX. All right, so this is SPX. This is very typical for the S&P 500. This is showing put skew. This is very typical. Uh, and institutional traders use SPX to hedge their delta exposures. All right, so Pharaoh, here's SPX, showing just really a very different skew, put skew for SPX, very typical high demand for puts. And again, that large traders, institutional traders used to hedge their delta exposure. We can take a look at NVIDIA, showing again some call skew, not as pronounced as Tesla. Let's see what they're doing in the Mag 7 stocks. So right now, both calls and puts are moving slightly lower. Take a look at S&P 500. Now it looks like the put number is starting to dominate. Let's change to the total signal here. There's that bug. Go back. All right, does anyone have any stocks they want me to take a look at? Please let me know. I'll be glad to do that. And so far the day, for the day, ES basically making a series of lower highs and then testing the volatility trigger levels. Let's just watch this. See if there's a reaction at the SPY 507 level. See if that level acts as resistance now. Caesar, just looking at your question again, just to note that Spotgamma focuses on the volatility trigger level, not the zero gamma level. Although the zero gamma level can act as support and resistance, I think according to Spotgamma, the volatility trigger is more important. All right, so we're watching for any reaction at the 507 level. Let's see what options traders are doing. And then just a note, when I'm trading, I have multiple screens, so I don't have to jump back and forth between one screen. So now it looks like options traders are taking positive delta positions. Heroes making a series of higher lows. Clean up this line a little bit. Extend it out to the right. So far, mostly green volume dots. Also some buy stop orders fueling this move. Those are not large. Let's check options traders again. Flow alert could indicate a potential reversal. Often these flow alerts are mean reverting signals. Now some aggressive sellers are starting to come in. Let's do a quick check of Nasdaq. So NQ back up at the QQQ 438 level. Let's go check Hero again. Right now, Hero leveling off for the SP 500. Check Mag 7. Back the SP 500. All right, flow alert. Signal levels off. Now aggressive sellers starting to come in. And hello, Anurag. Welcome. Glad you're here. Says thank you for sharing your analysis with us. You're a great trader. Have a wonderful rest of the day. Same to you. Let's check Nasdaq. See how it's doing at that. NQ is doing at that 438 level. Back and check Hero. And now Hero moving up again for the SP 500. As well as the Mag 7. All right, Pharaoh asks, what's the darker liquidity on ES? Above on ES, do you mean 5108? All right, sorry, I don't see any. So anyway, liquidity on the order book, that's shown with the heat map in Bookmap. This indicates above price limit sell orders, and this darker shading indicates there are more limit sell orders at that level. These are limit buy orders down just below the SPX 5070 level. All right, so it looks like this is going to move higher above the 507 level, breaking above that level as well as the trend line, maybe up to VWAP. All right, Rainy Days, you're welcome. Says this is very helpful. I've been using Spotgamma for a few months, but have recently started looking at Bookmap. Great. So you've got the right tools. That's what I use: Bookmap and Spotgamma. All right, let's go back to all right, Pharaoh, I don't see anything at 5108. Are you talking about SPX 5108? So there's nothing up here. I'm not showing that on my heat map here. 5108, I don't see anything. All right, so far it looks like ES is broken out above that 507 level, above the trend line. As the hero signal shifted higher, traders taking positive delta position. All right, my time is up. I want to wrap it up. I'm going to wrap it up. All right, 50.99 is what Pharaoh's asking about. That's just limit sell orders. You can see the larger numbers here in the order book, and this just shows a history of the limit orders. So these limit orders came in just after 1. They were pulled just after 1:30, came in again just before 2, and they're still on the order book. All right, everyone, thank you very much for watching. Thanks for your questions and comments. Remember, tomorrow, durable goods orders at 8:30 a.m. Eastern Time, consumer confidence at 10, and we'll talk about it tomorrow. All right, thanks, everyone. Thanks for your questions and comments, and I will see you tomorrow. Bye.